In an era of high volatility, the stock market resembles a wild roller coaster ride. Amidst this chaos, Verizon stands as a beacon of stability. The stock market, as we know it, is a stormy sea of uncertainty, with waves of fluctuating prices and a whirlwind of changing trends. Stocks rise and fall, often with little warning, and the gusts of global events can steer the market in unexpected directions. Yet, like a lighthouse guiding ships through a storm, Verizon Communications Inc. remains a steadfast presence. As others flounder in the tumultuous market, this giant in the telecommunications industry has shown remarkable resilience, even in the face of global economic upheaval. Warren Buffett, the Oracle of Omaha, known for his uncanny ability to spot undervalued stocks, recently made a significant move that caught the attention of investors worldwide. His company, Berkshire Hathaway, purchased a whopping 147 million shares of Verizon. This investment, totaling nearly $9 billion, sent a clear message. Buffett sees potential in Verizon, and when Buffett speaks, the market listens. However, Buffett's investment is not the only reason Verizon is turning heads. The company's long-term fundamentals suggest it is undervalued and has potential for growth. It boasts a low price-to-earnings ratio and a high dividend yield, making it an attractive opportunity for investors seeking steady returns. Verizon's 5G spending is expected to stabilize, leading to increased free cash flow, and despite concerns about its debt, the company's leverage ratios and interest coverage indicate a safe dividend. All these factors combined make Verizon a reliable blue-chip stock, with potential for long-term returns. With the market's turbulence, could Verizon be the safe harbor investors need? Delving into the heart of Verizon's business economics, we find a company with a strong market position and formidable competition. Verizon, a stalwart in the telecommunications industry, has built its robust business model around a comprehensive suite of services including wireless, broadband, and multimedia offerings. At the core of its business is a robust wireless network, which serves as the backbone for its various services. This network not only provides a solid revenue stream, but also a significant competitive advantage. As a leader in wireless connectivity, Verizon's network is a key differentiator, setting it apart from competitors and creating a substantial barrier to entry for new players. The ongoing rollout of its fifth-generation or 5G network further bolsters Verizon's market position. This next-generation technology promises faster data speeds, lower latency, and the capacity to connect more devices simultaneously. With 5G, Verizon is not just upgrading its network, it's opening up new avenues for growth, from enhanced mobile broadband to the Internet of Things and autonomous vehicles. Yet despite its strengths, Verizon faces significant challenges. It operates in a highly competitive market, with rivals like AT&T and T-Mobile constantly vying for market share. Additionally, Verizon grapples with a high level of debt, a remnant of its aggressive investments in network infrastructure and spectrum licenses. While this debt underpins Verizon's competitive advantage, it's also a substantial financial burden that the company must manage. Moreover, Verizon's future hinges on the successful deployment and adoption of its 5G network. While the potential of 5G is immense, its realization is contingent on a host of factors, from the development of 5G-compatible devices to regulatory approval and consumer adoption. This uncertainty adds a layer of risk to Verizon's outlook. Despite the hurdles, Verizon's resilient business model and future potential make it a company worth considering. Its strong market position, bolstered by a robust wireless network and the promise of 5G, underscores its staying power in the competitive telecommunications landscape. Yet, investors must also weigh the challenges it faces, from high debt to the uncertainties surrounding 5G. As with any investment, the decision to buy into Verizon is a balance of risk and reward. Investment potential is more than just numbers. It's about stability, growth, and the promise of returns. And Verizon seems to tick all the boxes. Let's delve into Verizon's financial performance. Despite underperforming in the past year, the long-term fundamentals of this telecommunications giant suggest that it is undervalued. This means it could be a potential goldmine for patient investors who are ready to wait for the company to realize its true value. Now let's talk dividends. Verizon offers an attractive high dividend yield. For those who may not know, a high dividend yield can be a sign of a company's financial strength and its commitment to return a portion of its earnings to shareholders. In fact, despite concerns about its debt, Verizon's leverage ratios and interest coverage indicate that its dividend is safe. This makes it a promising prospect for income-focused investors. But there's more. Verizon's future growth prospects are also something to look forward to. The company's spending on 5G is expected to stabilize, leading to increased free cash flow. For the uninitiated, free cash flow is the cash a company generates after accounting for capital expenditures. It's a key indicator of a company's financial flexibility and its ability to fund dividends, reduce debt, and invest in growth. Furthermore, the company's low price-to-earnings ratio, often referred to as the PE ratio, is another positive indicator. A low PE ratio could mean that the company's stock is undervalued, which again, might be a sign of a good investment opportunity. To top it all off, the likes of Warren Buffett have shown confidence in Verizon. Buffett's Berkshire Hathaway purchased a substantial amount of Verizon shares, a move that has been seen as an endorsement of the company's investment potential. So there you have it. Verizon, with its steady performance and promising future, could be the investment opportunity you've been waiting for. In this whirlwind of market volatility, making an informed investment decision is crucial. We've delved into the business economics of Verizon, explored its financial performance, and considered the potential of its generous dividend yield. We've seen that despite some concerns, Verizon's leverage ratios and interest coverage indicate a safe dividend. The company's future looks promising, with 5G spending expected to stabilize, leading to increased free cash flow. But remember, it's essential to do your own research and consider your personal financial situation before making any investment decisions. If you found this video helpful, don't forget to hit that subscribe button and share your thoughts in the comments. Remember, the best investment you can make is an informed one.